Hey all, welcome to the 13th session of private equity interview question. So today we'll dive into the topic is step change. So what if I told you the single move could instantly skyrocket a fund value? We are talking about the step change term, the game changing shift that can be redefined in private equity. So, welcome to the channel where we break down the complex world of finance into simple, actionable, and insight. Today, we are diving into the step up change and how they impact fund, financial statement, and why they matter to you. A step change refer to the significant change in the fund value in the way that they operate, maybe their decision like they will take a strategic decision, or maybe the acquisition, expansion, or large scale investment into the fund. So this impact may be significant change in the fund. So impact in the statement why it matter. So a step change can dramatically change, affect, or may impact the net asset value, increasing the overall asset values and consequently the management fees tied to those assets. Any exception in accounting is possible? Yes, it's possible in PE. Step change are typically accounted for when the transaction occurs, such as acquisition or a public listing. This might not always align with the accrual method of accounting. So, what are the example of this? So, think about the capital massive shift change into value where the Airbnb went public. This is a prime example of step change. So, you can Google out and you can check about how it's get changed. So, we created one simple example on that part also. We'll discuss now as an example. So imagine a fund has invested into the startup and the startup suddenly goes to public. Means it is a very short firm which is a startup. We can say the venture capital or startup capital started and they goes to public, means they release the IPO, FPO, and it goes to the public. The valuation of the startup skyrocket, leading to the significant step change into fund portfolio. So how is get changed? We draft an example category: a startup valuation, startup fund stake, and the fund investment values as well. So the startup initial investment before the pre IPO was 50 million, and after the IPO it goes to the 200 million, and the step change is 150 million. So this is how the fund get changed. In simple terms, the fund stake will be the same 20% only, and the fund investment value has increased from the 10 to 40, 30 will be the step change. So whatever the change in the fund after taking some decision or taking some actionable thing or expansion of the business, maybe the change on the part of a fund. So step change can make a break in the PE firm, and knowing how they work gives you a major advantage. If you love insight like this, smash like a like button, subscribe, and let me know your comment on this part. What the biggest step change you have seen in your finance? See you on the next time. You can comment on this section as well if you know more info on this part. Thank you so much for watching this. We'll meet you in the next part.